My bad. Now I think you can hear me. I'm sorry. Crap. I forgot to put this little icon up there on StreamYard. I see. Thank you. Thank you, Scott. Thank you, Tina. You guys should be able to hear me now. Yeah, there it is. Thank you. My bad. I forget to do that. We're still testing out this StreamYard product over Zoom. Okay, so let me regroup and share with you a couple of things. Um, First, let me change this back to a 5 minute. Let me put everything on a 5 minute. So we'll come down here, all symbols, and let's review a few things. Thank you. Good to see you, Tina. Thanks, Scott. Scott, are you our Scott? I think it's our Scott in PA. Yeah, Tina. Yes. Okay. I think it's our Scott too. Scott, I think Scott's a member, and in Pennsylvania, right, Scott? So if it's the same Scott. I never know. I can't tell, some names I can tell on YouTube, but yeah, good to see you, Scott. Everything going okay? I hope so. Let us know. Scott's a member and an annual member. Okay, let's just take a look at the 5 minute. The 5 minute VIX goes long at 8:35 this morning. What does that mean? That means that the futures traders are placing a bet on the options market that they're going to be doing what? Yeah, yeah, exactly, Scott. Yeah, yeah. That and that the likelihood is that the market is going to turn down. Here's the ES. The ES goes short 5 minutes later at 8:30. At 8:30. Now, if you had taken it short, you'd be up $1,000 with a mini. If you had done it with a micro, you'd be up 100. If you had done it with 10 minis, you'd be up 10 grand. Now, the NQ went short at 8:25, just 5 minutes before, 1,000. Right? It's pulled up against it a little bit. 8:25, 1270, 8:25. The point I'm making is that Jim Cramer on CNBC would have you believe what? That this is a market of stocks. Got to be a stock picker. It's a market of stocks. No, absolutely reject it. It's a self-serving distraction. The markets have been for decades commoditized. They are a commodity. What is a commodity, Don? Corn, gold, coffee, lumber, orange juice. It is a commodity. There's not much exciting about corn unless you're growing it and selling it. There's not much exciting about lumber. You couldn't have a financial show to talk about lumber. It would get old, right? So they don't talk about the markets as though they're a commodity. They distract with the individual stocks. They tell stories, they tell narratives. Why? Because they can sell advertising, and those stories only distract you from the real game. S&P 500, there are 500 stocks. Nasdaq thousands, Dow 30, the Russell 2000. How is it they can all move together? Excuse me, had a little dry throat there. How is it they can all move together? A rising tide will raise all boats. A lowering tide will lower all boats. Yes, a particular stock might outperform for a little bit or less perform, but it's a distraction to the day-to-day trading. And it's not capital efficient or time efficient to trade individual stocks. Invest, sure. And there's a whole technique for that, which we also teach, but it's something different. But when we're trading the indices, the futures, just like they were any other commodity. Now, what I was describing was I'm going to put the VIX onto a daily time frame, and I'm going to put the ES into a daily time frame. Now, Tina knows this. Scott knows this because he's also a member. 5 or 6 weeks ago, do you remember when the S&P was trading at 6,100, 6,150? You can see it on your chart. On the Swing Machine Plus, the ES was where it was up in euphoria. Euphoria. The VIX on a daily was where it was in panic. You can go back and watch some of our videos because I called it out. I told you I wasn't suggesting anybody do anything with their money. I wouldn't do that. We're not a broker. We don't make specific recommendations to buy or sell anything. We don't even make recommendations that this is something that you should or should not do. You've got to make your own decision. But if you do, we're a mentorship, not an apprenticeship. But when we were there, when the VIX was here and the market was here, and by the way, we also had the skew, and the skew was extremely high. The skew was at 182, the highest I'd ever seen. And I said, my word, we're going to do what? We're going to get puts on for when? Said into the middle part, the latter part of March and April. I actually said, beware the Ides of March. March can be a very interesting month, historically speaking, and also in the markets. Now, we got our correction. What you can't see here today was when we established a low, a near-term low in the market. You can see it on your charts just about 10, 15 days ago. When we were there, where was the VIX? The VIX was then now in euphoria. Where was the market? The S&P was in panic. What did we do? And by the way, the skew had come down from 180 to 170, 150, 130. That skew told us as well that the big money were taking their puts off, but we did it before. What did we do? We took our puts off. We put that cash in our pocket. We also, we're aggressive. We're traders, right? We're not making economic decisions about the market. We're not correlating the market with the economy and the economy with the market. It is a big waste of time. Now, the media will do that because that's how they sell their soap and their $50,000 cars to people and, advertising. We also said, if you recall, we were back in here. It was middle part of last week, even before. We said the contracts are going to roll on the 14th. We're going to start trading the June contracts. And then the March contracts are going to go bye-bye today. And we said historically, when the market is sold off hard like that, they like to bounce the market. And so we were preparing for that. Now, this bounce that we had, I'm just telling you or sharing with you. I don't want to be talking at anybody, but I thought it was a fairly anemic bounce. And we can see the VIX came in on a daily back to the mean. The ES bounced to the mean. It didn't go, this one's a little bit below, but it wasn't as strong of a bounce as I thought. So today is a very important day. The latter part of the last few hours of options expiration will be chaotic. If we sell off hard today, 300, we sell off really hard into the close. Monday and Tuesday could be very bad. I still think that early next week is going to be rough. If we close flat to up, we might open up on Sunday. We might open up a little bit on Monday, but I think Tuesday afternoon we might return to a selling environment, the downtrend, and have to revisit those lows that were established. because the daily trend is down. Let's put everything on a daily, by the way. Let's just do it from here. And I can show you. I don't need to see a chart. And if you have this tool on your desktop, and we have 70 tools, not just this, but you don't need a chart. 19 days ago, 17 days ago, the VIX, but it responded to the market. 19 days ago, if you shorted at 60.26, we shorted higher, you would have captured a 6% profit, or there's a 6% return between the entry price where we are now. But because it's a leverage product, one mini contract would have produced $18,000. 18,000. If you did it with a micro, it would have been 1,800. If you did it with 10 minis, it would have been 180,000. Look at the NASDAQ, 18 days, just 1 day difference, right? It's got nothing to do with Tesla. It's got nothing to do with nothing, right? It's traders, it's hedge funds making money on the back of the masses that don't bother to learn. And you can go to the best schools in the country and they're not going to teach you the markets. They're going to teach you the same old shit. But that's neither here nor there. $34,000. One mini, one micro is 3,400. 10 minis is 340 grand. The YM, 20 days ago, 10 grand. 30 days ago, 12 grand. And I can tell you without looking at a chart, we are dead in the middle. It's going to be decision time. I think we need to go back down and revisit those lows. And if we take those lows out, it's going to be like shit through a goose. That's when the public is then going to begin to get, ooh, what else? What has happened here? And we can talk about the whys and everything, but that's the rational side of your brain. And I'm happy to have those conversations, but it doesn't matter to Susan and I when we're trading. Just doesn't matter. And I know you've been taught that it does matter. They haven't taught you anything. All they have taught you is to subscribe to their newspapers, to subscribe to their TV stations with their shows, or to subscribe to their services. We are a mentoring site. We're far different. We're going to teach you how to trade on an interval of your choosing. You want to be here every day like Tina's, in the market every day, and you want to trade intraday? Great. Great. We do. You want to invest for the long haul? You can do that too. You can use the same tools. Or you can swing trade using options. But you can do that. So I just want you to know. Um, we can change this all back. And let me do that. And we also said, before I forget, on Wednesday, let's go look at gold before we go too far here. I just want to point this out. I forgot I was talking and my mic wasn't on. So thank you, Scott and Tina. Gold on Wednesday was in euphoria. We said on Wednesday, gold has a tendency, especially when it's had a big run, to sell. I don't know what it is, but it has a tendency to want to pull back on Fridays. It's $3,000 here. 29 points is $3,000 on a futures contract. So even if you got a put option, you could have done very, very well. So let me pull this back and let me customize all. I'm going to put them all back to a 5-minute because we're trading, we trade intraday. Now, when we in service those that are in Q School Swing Machine, it takes us, honestly, it's now taking us upwards of a week to explain what it's doing, how it's doing it, how you might trade it, just to explain it and get folks acclimated to it. It's extremely powerful tool. You're seeing it very simply on a 5 minute. I know you are, and it is, and it can be that simple. It absolutely can be, but it's also very sophisticated. And you can trade. We don't talk much on YouTube about this side of Swing Machine. This is very tradable. We can trade multiple time frames, multiple markets, and we can trade those mechanically. We can trade them robotically. And all we can do during Q school is to begin to peel these tools back to give a person some insight as to what they're about. But you will spend um well, it won't be 5 or 6 weeks, it won't be 5 or 6 months, it won't be a year. You will spend the rest of your life working on your game. So I hope it's something, if you do decide to do it, that you really, really want to do. If you're looking at this, and please don't, but I hope not. If you're looking at this as some sort of red light, green light system, and you're going to be able to jump the shark, and honey, I'm just going to get on here, and you know, that's not what we're trying to convey at all, right? That would be the wrong conclusion, right? And that's not who we are. And if you think about our membership, um, if we were trying to just sell memberships, I mean, we'll get you gym memberships, right? They'll call you morning, noon, and night. I don't pester anybody, and actually, I try to slow the process down. It's incremental, so you can't even join as an annual member until you go through the Q school. And there's a risk there, I suppose, but not really. Others may see it as a risk. We don't. That at the end of the Q school, you say, you know what? This is way more involved, way more than I want to do. And I'm not sure if I can do it. And I don't want to go any further. That's okay. It's all right. I hope you don't reach that conclusion. We'll try not, but you might. You might. We've had a few, a handful over the years for various reasons, and it's their reasons. But the vast majority of folks that go to the queue can't wait to get going. Um, but it doesn't matter what they do. Doesn't matter what I do. It only matters what you do, right? You're only interested in what you do. Um, we have a vested interest. We want you to do well. I want you to do well. Um, and but you will be learning to play your game. And I just want to show this. This is always interesting. Now, I don't know who Triplet Life is, and I apologize. Maybe we've spoken. I'm not sure, but he or she sent us this note. I love your SMC. Didn't This was this morning, I guess. I didn't take a trade most of the day, and then went short at the end of the day. Was down $1,000 at a point, and now look, one day, Don, one day I'll have the capital to make the team. Well, um, we thank you, and I'm glad that that maybe worked out. I don't know the details, but a couple of things. It is a community, but it isn't a team sport. It's an individual sport like golf. You're gonna have to play your own game, and it is wonderful, to have a winning trade. But for those of you who have been watching us for weeks and for months, you have to understand with your own trading, no one trade is going to make you rich if you're trading it proportionately. Not going to happen. It shouldn't happen, because if one trade can make you rich, then one trade can make you broke, and that should never happen. Triplet, you know, made some money. That's always good, but anybody can make money on any given trade. Anybody can make money on any given day. Anybody can maybe make money on a given week, but not everybody can make money day in, day out, week in, week out. There's a difference. And we don't even grade ourselves. This is what's shocking. See, and when Swing Machine first came out, we didn't even show the money. You know, we didn't, because we don't grade ourselves on the money. We didn't even have a column showing the money. We didn't even have it. Now we were asked to put that in, and we have. But um, as you all know, and I won't repeat it now, but unless anyone's got a question, but we grade ourselves on profit factor. And so you need to have, and that's what we're going to teach you, so that you can repeat it. In golf, they talk about having a repetitive golf swing under pressure, in the heat of the game. You need to be able to count on it. And if you don't have that, you need to get with someone that can teach you the fundamentals of trading, the fundamentals of the market. There is something called the fundamentals of the market, and we will use that for investments. We will, but the fundamentals of trading, so that you can learn your own trading personality, and so that Triplet could repeat that. Now, it may not be every day. I don't know what they made. And it's also not possible. You mentioned the drawdown. Now, he may have been tested there. Probably was. Don't know if he had a stop. Could have been dangerous. Really could have been dangerous if he didn't have a stop. Because maybe he made, or she made, a few thousand, but what if they lost 3 or 4 thousand or 5,000? See, we have one of the first things that we teach is zero uh, negative outliers. You see, we can control the profit in terms of where we capture it. We can do that, but you can't really control that. What you can control is what you lose. And if you don't control what you lose, then you're over your skis. You know, we used to like to go skiing. You get on the bunny slope and you learn how to ski. You start out, with short skis, right? And then they make them a little longer, and they make them a little longer. And then you learn how to ski a little bit in an afternoon or a day or two. Then you go up the chairlift and you ski. But, you don't do that in a day or two and then go up to the top of the mountain and get on a black diamond and try to get down in one piece. It's incremental. So when we start somebody out trading in the Q school, we actually start them with the 1 and the 5 minute on Swing Machine. It's like starting somebody with short skis. It's like teaching somebody how to play golf by just pitching the golf ball with a little pitching wedge. Click, click, click. Just getting them click, click. So for instance, Dickon, he's one of our persons in Q school. And so when we connected just yesterday, and he says, I know what you're going to ask me, Don. What's my profit factor? How many trades that I have? So it was kind of interesting. He said, well, I didn't do much, Don. Well, what did you do, Dickon? Well, I had 3 trades. Okay, that's good. Over a couple of hours. Okay. What next? And I just listened. I made $375, Don. Not a lot of money. I'm like, okay. Anything else? No, that was that, but it wasn't much, Don. Well, there's a few things that tells me he was over a few hours. Um, some people could trade 30 times in that. He just traded 3 times. Tells me disciplines, tells me patience. He also maybe discounted a little bit, which I pointed out to him. I said, what is your profit factor? He goes, well, I can't calculate that, Don, because I didn't have any losses. I'm like, no, we can. You may not have had any losses, but you did have a business expense, the cost of the trade. So $3 in, $3. That's $3 in and out. $3. So for the 3 trades he spent, we'll round it off and call it $10. It's actually 9. So if he grossed $375, you divide the 10. What was his profit factor? 37, 37.50. He made $37 for every dollar he expended. That's superb. It's superb. Now, the other piece is the money for the time in the market and the risk. It is what it is. But I just reminded Dickin, there are 20 trading days in a month. If that was so comfortable and so measurable, if he has 20 of those, 20 days, there are actually 24 trading days if you trade on Sunday night. But if we take Fridays off, 20 times $300 a day be $6,000 a month. Not bad. But he's also putting himself in position for doing much, much more. Trading as a business. So today is Friday. Do you know? I bet you know how much money you made or lost. But do you know your profit factor for this past week? Last week? Last month? Last year? If you don't know your profit factor for each one of the markets and what you're doing, then you're not keeping score correctly. You don't know how many fairways you've hit. You don't know how many sand saves you've had. You don't know how many putts you're making in a round. And if you don't have that kind of detail, then you don't know what to work on. You don't know what is working. You don't know what isn't working. Now, I'm glad Triplet, maybe, made a bunch of money, but Triplet may have lost a bunch of money earlier. So we don't know. And if you're grading yourself on the money, then you're trading greed and fear. And you're not really serious about your game. I'm dead serious about all this. I mean, I spend a lot of time. I'm very well rewarded for this, and it's a blast. So when we're sharing this, I'm not talking at anyone at all. I'm really not. I get it. I do get it. I mean, we've learned, we've grown, and we're sharing that with y'all. And I don't know how in the world you find us. I don't. Because we don't do any advertising to speak of. And I just said to Susie, now our annual licenses, by the way, are limited. And for the last 5 years, we've had to stop, with the exception of last year because of the hurricane goofed us up. But that Hurricane Milton. Um, and so that was unusual. But usually we stop issuing the annual licenses. We have a certain number, and we stop on November 1, and then we resume. And the reason being is we can only grow so fast. It's just Susie and I, and we're not gonna, that's it. And we're not, we are very, modest. It's just what we enjoy doing, um, as well as our own trading. But I was just looking. I mean, we're this is the end of March, of our quarter, once again, and we've been growing it at 50% clip. At the end of this quarter, we're at 62% clip. We're just growing, and it's great. And we have people from all over the world, and they're all different backgrounds, and we learn from each person. And so I guess, but the bigger point is, you can virtually bet on it that there'll be no more annual licenses after November 1, but it might be September 1. Because if we hit that number, we hit that amount, it's not necessarily a number, it's the workload that goes around it that we won't exceed. And all of this is extremely, our trading is very well thought out, but the business of stock market caddy is also very well thought out. And a big portion is we need to be able to support and build what we have. And there's just so many hours in a day. We're not even trading on a Friday, but this was enticing to me. Too enticing last night. And so one of the things that I like to do when we were describing this is if I can get on a position. I mean, we have plenty of wood in the trade. What I mean by that is we exceeded last week's goal handsomely. We exceeded this week's goal handsomely. So um, I said to Susan is that we would let the market do its thing last night, and if I could ease into a particularly a short trade, if I could ease into it, and then I would set a break even stop and let her run and see if we get the collapse. So I'm not you may be watching, you're probably watching the money more than I am. I don't make the decisions, on try not to on the money. Every once in a while there might be something, but normally 99 trying to work on it as well. Always, trying to use the tools because you may be looking at that position and saying, boy, that's $1,600. He had $3,000. Boy, I would have taken the money. Boy, I would have taken the money. Um, yeah, maybe you would have. Um, maybe Susan would have. But what you don't know, what I don't know, is we have a break even on here. I'm going to have had a great week last week. I exceeded my goal. I will have exceeded my goal no matter what happens here. In this trade, I can't lose money. It's one thing to have been up 5,460 and then and then to be down. That trade has a break even. I might make, I don't know what it is, about $100 some. So it's a free trade. It's free. I can't lose anything. So what we don't know, and I have a little larger view of the other tools, that if the market does turn down this afternoon, that may go from 5460 that you see on the high water, may go to 10,000, 15,000, and I have dynamic profit targets tracking that for me as well. So I just describe it at the beginning of the week. um, I have a little different style. We start out, um, I'm more um, patient with the trades, maybe a little more aggressive at the beginning of the week. And then at the end of the week, when we've exceeded our goal, I will either trade very small and just add icing on the cake, or if I think the market is going to, is capable of giving me a real outsized profit, well, then I will try to ease into the trade and set a break even. I did that yesterday. You may have seen that. And guess what? I had a run up of 6 or 7,000 and I broke even. That's not, it's fine. It's fine. I describe it. And we're right back again doing it again today. And I might break even. But if I keep doing, when I keep doing that, this is my experience. And I just share with you, when I keep doing that and I'm disciplined, I'm using the tools, I'm not beating myself up over the money, I'm not getting greedy, I'm not equating any significance at all to the money. I am playing the game. What I'm in essence doing, it's like, and I realize I talk to some folks and they don't know American baseball. And they're like, I've watched you on that analogy, Don. In American baseball, for those that aren't baseball fans, but you got a batter and you got a pitcher. And the batter stands up and he's got to try to hit that pitch. And that pitcher is throwing that baseball, 90, 100 miles an hour, trying to strike him out. That batter may have to do what? He may have to foul off the pitch. He doesn't want to get called out on strikes, so he swings and he tips it off and it goes into the net, right? And he stays in. It's a battle between him and the pitcher. So the crowd may think, oh, he spoiled the pitch, he spoiled the pitch, he spoiled the pitch, right? And it can go on, right? This battle between the pitcher and the batter, and he spoils it off. When you set those break even stops, you know the market is the pitcher. We can't control. The market is going to pitch what it's going to pitch. But when you're using these controls, and the machine is using those controls, yes, we might foul off a few trades. We fouled one off yesterday. Boom, no big deal. Foul it off, foul it off. But I'm forcing the market to pitch to me. And you keep doing that. And every once in a while, you're going to get that rip. You're going to get that hit. You're going to have, and then we don't keep a batting score, but because win loss ratios are not important, we keep the profit factor. So that tells us we're getting the job done. Susan does it too. We teach everybody to do it. Hopefully one day you'll do it. Make sense? All right. I'm going to shut up, let you watch, and we'll see. But I do have a break even on there, so I may follow it off. And you may, a drive by on YouTube was, oh man, he's a sloppy trader. What does he know? Man, I would have done this. I would have, that's fine. That's not what we're doing here, as you know. Very, very different. Nobody is doing. I see what you see. We're not on Discord. I see it. I hear it a little bit. And I see the other stuff. I don't see anybody doing what we're doing. I don't. No, not at all. And the most important thing is that we have other tools, but these tools can be on your desktop. You can do it yourself and play your game. What pitches you want to swing at? How long do you want to stay in these trades, right? How long do you want to stay up to the bat? Like I like to stay right, and especially when I'm up, right? I run up the score. You know what? I'm going to force this market to pitch to me. So right now, you're seeing the 5 minute cycle, maybe cycle through a little bit today, but I've relaxed, my posture at bat, and I'm gonna let it play out. And that's what we're doing. I can only describe that. I describe it in sporting terms: golf, baseball, football, soccer, could be whatever your sport is. I don't know cricket, so I can't use cricket, but to me, trading is a sporting event. That's why it's so damn fun. Enjoy. Any questions, let me know. So I'm going to be in and out, right? And we'll have visibility on this. We're going to let you watch the rest of the afternoon. And again, it's just going to be a little bit choppy. This is an unusual day, options expiration day. Susan won't trade intraday on options expiration. And but again, here what we're doing, you're watching swing, and but we're going to see if we can ride this into the close, and then I'll have if this market falls apart, which I think it might, um, and starts making a move toward those lows, then I'm going to be judging, the strength of that. We got tools to do that, and then I'll have a decision to make. Can't make it now. I can only describe it to you in advance, and that decision will be: do I want to carry into the weekend, into Sunday night? Now I can always deal with this, on Sunday night. When a market is bullish, bull, bull, bull. When a market is bullish, um, they don't like to go into the hedge funds don't like to go into the weekend short. But when a market is correcting, or I'm using the word bearish, right? But it depends on the interval. But at least near term, the market, as you saw from Swing Machine on a daily, the trend is down. They're coming out. I'm not saying that, the world is ending or anything of that. We're not, these folks that compare things to 1929 on charts and everything else, that's a fool's errand. We're not doing that. We're just staying in gear. But when it takes on that bearish tone, when daily Swing Machine is short, they they can um they'd rather not go into the weekend long, right? Goes just the opposite. They'd rather maybe be out. So I always like to see, so we can, during bullish times, Friday afternoons they'll rally. During bearish times, they can sell off. So that's what we're thinking. But we want to see it. I want to see that close, and then we can decide what we might want to do. Um, wanted to let's me while we're doing this, let me just show you, for those of you that like to look at the charts. Let me give you a glimpse. Do you remember this guy? This is the Renko chart, right? This is insane, right? I've got to at 2, I'm going to connect with Alan, and I'm also going to show this to Dickon next week. But well, we probably won't be doing this today. But this is a Renko chart on the S&P. And now this is us over here. This is where we are right now. And let me get a date. This is February 9th. So it's about a month ago. Isn't that crazy? February 9th, right here. All right. Well, one of the things is, this was the big decline that we just had, right? This is where this is up here at, this is the S&P. This is 6,200, right? We got right up in there, about 6,200. This is where we were, putting on our shorts. So we come down and we have this little shallow bounce. I thought the bounce would maybe come up into here. We didn't get it. Very shallow. And actually we're headed back. This is the low that we just established. This is back on the 13th. So this is the one that I'm speaking about. If we take on the S&P, and they all go together, right? So it doesn't matter if it's a NASDAQ, I mean, if the S&P goes, the NASDAQ's going, the Dow's going, they're all going. They all go together within a day or so. So if we take this out, this is the one. If we take this area out, it could be shit through a goose. I mean, we might go from whatever. Let's do the math on this. If this is roughly 6,200, let me get a peek. Get my computer glasses on. Take a peek. Those numbers, I gotta increase the font. But with 6,200, what is this? Bear with me. 5560. 50, 55. 5565. So I'm not that smart. So I gotta use a calculator. When you do it, I'll do it right. So bear with me. 6,200 minus 5,564. That's 600 points. 636 points. Now, did we get all those points? No, but we got a nice chunk. Right? Very nice. If we break this, it's entirely possible that we extend another 636 points. From where? Not from here, but from here. And that would put us down to, that's 5660. That put us down to about about 5100 or so, right? You can write some of these numbers down. Take off 5700. That would be about 5160 thereabouts. That's what it could do. It absolutely could. And if we have a slice through that, that's when the public would then begin to panic. Begin to panic, right? They will mostly panic at the lows. But this is what I want to show you. This is crazy good. I'm not printing that. The machine is printing that. So if you don't understand, but you will after Q school, but this will speak to you. This will speak to you. These are C points. Here we go, right? So we've added a bunch, right? We've done this before, but this has been added dynamically since we did this last. So this is just going back here to February 9th. All right, so this C point, bear with me, gets printed. Let me get a color, show you. If you want to play this way, you could do it. You would have to get it programmed to send the alert to your phone, so you're not, tethered in your seat, but there's nothing wrong with this. Do you see this one here? That is a buy dot, and this dot shows up right here, right there. That's when that shows up. So I'm going to do this. That one measly brick with a mini contract is $1,000. So you could have made $1,000 if you got that one. And then this one shows up right here. It's not on every time. And then you could have made another one. So that if you played for just one brick, you would have made 2,000. Now, when you play this way, you have to risk 2 bricks and a little bit, or you have to risk $2,100 at this size, and this is what you're doing. Now, these C points are not drawing on every brick, and you can't trade Rincos on every brick. The brick size are extremely important, and we have an algo to size these bricks, and we can't give you the code for the C points, but it's a beautiful thing. So now stay with me, and we'll count. And we're foregoing the profits, bigger profits, and we're just playing with a 9-iron. I mean, you could play with a 9-iron 18 holes of golf. It would just take longer, but you could do it. So here's 1, here's 2. Validate these with me. 2, right? You agree? Everybody with me? I hope. So there's 2. Here's 3. Here's 4. What's it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 trades. And you never had a losing trade. And since February, what was that date? Over here, what was that date? February 9th to now. You've made 21 grand. Can you machine it? Yes. Can you have the alerts go to your phone? Yes. The biggest frustration you would have had was that you would have left a ton of money on the table, because if you learn and get better at it, but you could do it. I'm gonna clear all that writing, and you could have the alerts, courtesy of TradeStation, go to your email, and then from there configure it and go to your phone. Oh, I hate when I do that. Put all that back. There we go. Sorry. I've got to careful here. I don't lose all my writing. Um, I just lose all these markers here. Does that make sense? Now, to put it on, you do need to risk, 2 bricks and a little bit, and but it's just a fine way to go. The problem with Rinkos, like everything, um, folks don't know how to size the bricks, and they use moving averages, and that won't work. Doesn't work on anything. Let's go. Let's go look. Let's go look at skew. Now, skew is starting suddenly to increase. It did bottom out. We commented to our members. By the way, this is today. Let's go look. So check this out. Oh, this is great shit here. Look at this. All right. So if you want to trade stocks in trade options, this is a trade generator for Pebble Beach triggers. I don't know if they had earnings, but that was one of the top stocks last night. But look at what Pebble Beach did with this one. This is Micron Technology. It's down 9 points. Pebble Beach sold it at, so let's go look. It's over here. There's the trade. She gapped down a little bit. Let's see if we could have got the gap. The entry price was 101. So it was up in here. And may not have been able to get that actual price. It gives you a stop too, but you still could have got a bunch of points on this. And this reflects a $10,000 amount of money, so we can say it was 7.3%. But you could use options in here too. But look at, these are all the signals. These are happening today. We got a total of, take out the label row, we got a total of 17 signals, and it's in the money in every single one of them. I mean, if you want to be hunting and pecking and going from screen to screen and noise to noise and just doing the Discord thing and everything else, have at it. But I mean, we're not doing that. Our members are not doing that. No, 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 no. And in fact, I mean, and that's what we're doing with Dickin and with Alan. What we're trying to share too as we go is how we set up our workflow. Right? There's a workflow here, right? It isn't, you get to see in a very small snippet on StreamYard, but we've got multiple screens, not screens per se, but we were desktops and workspaces, and how we put all that together to maximize our time. So we can be incredibly efficient with our trading, and incredibly precise, incredibly efficient, day after day after day. You know, um, it's and you can be too. I mean, you can, and that's what we're trying to show. And I think everyone, I know they do, because they say, Don, we appreciate that. And so what I'm trying to do is, not show an individual fish caught or anything, but trying to show how they're gonna, what they need to go out and go fly fishing or bass fishing, um, and have fun. So let's slide over. I want to show you something else. Here's the skew. Well, here's the yield curve. Let's go take a peek at the yield curve. Boy, it's just 5 basis points from going negative. Now, it isn't going to be like like just go negative, and then all hell's going to break loose. But um, we're moving into, folks, into a recession. I mean, we're probably in it now. By the time we come out of it, they'll be telling you we're in it. But the economy is going into a recession. It just is. This is classic. When it first goes negative, when the yield curve first goes negative, which was November of not last year, but the year before, it goes negative for about 15 months. And everyone thinks, oh, it's going into recession. It doesn't. It lags. There's a wicked lag. And it's usually about 15, 16 months. Then what happens is everyone thinks, oh, okay, we're not going into recession. And then the yield curve goes positive, which it did right here, right here. See, this is all being done, mapped out for us. Then that's the signal that it's coming, that it's coming. And then when it goes again, it's the second mouse that gets the cheese. And that's when it's going to go negative. And when it goes negative, within weeks, very quickly, maybe happening right now, we will go, the United States economy will be in recession. And the markets are not going to be happy. Traders will be very happy. We make a lot more money on the way down than we make it on the way up. It just, fear is a greater motivator than greed, and they really puke. But that's what's going to happen. And it will end the same way. And it usually lasts from about 12 to 18 months. Now, the markets will be very volatile, so the trading will be great. Not scaring anybody. This is a normal. We're normalizing, and Trump and his people are also normalizing the markets. So my guess is, that this one will last about 12 or 18 months. It could be this time next year, in front of the midterms. Trump will be appointing a new Fed chairman. Markets they'll be down a bunch. They'll be down a bunch. 40, 50% maybe, if he doesn't flinch. If Trump doesn't flinch, this is what I think will play out. And then he will appoint a new Fed governor. You can write it down. I think it'll be Kevin Warsh. His name is Kevin Warsh. I think that's who they're going to appoint. And what are they going to do? They're going to cut interest rates. It's not, I don't think they should, but that's what they're going to do. And then they will, some of the departments that they're ending today, they'll probably build new ones. And he'll cut interest rates. He'll increase the spending, and he will light it up. And the market will roar coming out of it. And he'll be doing it for the midterms. And the Democrats don't know it yet, but they've been outplayed. They're going to have to, I don't know what they're going to do, but then we're going to probably have to form a new party or something, because he's playing for the long game. But that's what it looks like. But anything can happen in between that, right? That's probably what they're trying to engineer. But a lot of things could, this is, they're flying a very big plane and trying to land it on an aircraft carrier. They're trying to maneuver this, but we're very, very close. And it's going to be the interest rates. It's the only thing they can control. Here is skew, and so you can see skew when the market was at 62, 6100, 6150 is where we were getting short. We didn't get 6200. When we were up here, the skew is at 182, which was the highest I'd ever seen. It was an extremely easy trade. And I was telling everybody, you guys got to remember, Tina's got to remember. I was like, guys, I'm telling you, they're buying puts like crazy. They're selling calls and they're buying puts, the big smart money that we're setting up for a big something. And that's it. As we came down, you can see the skew is this line right here. The skew came down. It got all the way down to about 131, 132. It got very, very low. And then we got this very shallow bounce here. You see it? I can use this chart too, by the way. And this very shallow bounce, and then even on the bounce, they started to raise the skew again. So they're starting to get their puts back on. Let me show you in terms of a Fibonacci. We can come here and do this. Those of you that like the charts, and we can do this sort of thing. We just don't trade from it. Let me see if I can open this up. Oh, shoot. My computer doesn't want to open it up. Come on. I may not be able to do it. We got a lot of things running today. Let's see. It's kind of angry. I can't seem to open it. But you can see that this, from here to here, this is a very shallow bounce, not even 0.36. So the likelihood is, I'll draw it by hand. If you were to do a Fibonacci on your charts, you would do it like this. You would draw a line from the high and you would take it down to the obvious low. That's supposed to be a straight. Let me do it this way. So my hand, it's hard to draw with the mouse. So you take it down here. And then if this is the pivot, you would take your Fibonacci to here, and then it'll give you your extension. So whatever we did from here, A to B, if this is the C point, which I think it might be, the C point, we will extend most likely that amount. And that would put us down, roughly, I'm doing it by hand, roughly to about 5,000. If this turns out to be the C point, can it go lower? It absolutely can. If they panic and the public usually panics, they don't sell up here. They buy. They kind of sell down here and then get caught. They'll buy in here too. When we're in a downtrend, when they buy these, the pros call them fish hooks. They're gaffing them. And then we can do, then we could do it again. We could do something like this. And what do? They'll buy, they think that's a dip. It isn't, it's a rip. It's a fish hook. And they buy it and they get killed. And then we rally again, they buy it again and they get killed. See, you can buy the dip on the way up, but you buy the dips on the way down, they will lose all of their gains for the last 10 years. They will lose them all and more. It happens all the time. But we don't know if that's going to play out, right? We'll watch it, we'll see. But I don't make financial decisions, trading decisions based on that little map. I don't do that. We have algos to map this out for us, and we just follow them. And we control our drawdowns and our losses. Make sense? Okay. Let's slide us back. We'll go back here for now. If you want us to plug in any market into swing, or you want us to look at any market on a chart, you want to do something like that, just punch it up, let us know. We're going to let you watch. At 2:00, I'm going to be catching up with Alan, and we're going to be busy in the afternoon. And we got some other work to do. If Daniel, if you're listening from Norway, Daniel's rolling into his Q school. I have not forgotten you, Daniel. We have a welcoming video that we're working on now for you. We're also looking at the dates, and I'll have that to you either today or tomorrow morning. For everyone else, I look forward to my Saturday mornings. I'm in the office early Saturday morning through noon, and then out, and then back in the office on Sunday afternoon. But you're always welcome to call any day. Doesn't matter. Weekends, daily. You want to talk about the markets? You want to tell me what you've been doing? Want to commiserate? You want to ask questions about Stock Market Caddy? I'm happy to do that. 9 a.m. to 9 p.m. This is what I love to do. So this is what I do. So I'm happy to talk to you about it and what you've been doing and what we might be able to do for you. And if I don't think we can help you, I'll tell you. We have had folks come to us with much more trading experience than ourselves, and we've had folks come to us with no trading experience. In fact, probably the most successful person we've had came to us with no trading experience. And you guys, some of you know that story, so I won't repeat it right now. Um, but he put himself. Some may look back, and if you will tell that story again someday, but you might say he was lucky. Yeah, he was kind of lucky on some things, but then again, he put himself in a position he put himself in position to take advantage of that opportunity. So can't really say it was luck, because if he hadn't learned what he learned, hadn't acquired the confidence when the opportunity presented, he wouldn't have known, and he would not have been able to do it. Some people can luck and go through life that way, but in a trading environment, if you're going to be actively trading, Um, that's you can't rely on luck. They'll chew you up, and we don't. Enjoy. Thanks. By the way, I'll just share with everybody. If Scott is still here, Scott went through our Q school in the fall back during the hurricane days. We actually got interrupted because of the hurricane. So if you want to direct the question to Scott, feel free. I think if he has time, he'll you know can chat back. Maybe I should have asked you, Scott, but I don't think Scott would mind. But and Tina has been shadowing us for seems like a couple of years now. Tina's gonna eventually join in. That's totally okay. It's free to shadow, but so and good afternoon, Joseph. Good afternoon. I'm not sure where Joseph is at, but I know you got stung the other day, Joseph. I understand what that's about. I do, and but we can help you prevent that from happening, and you can prevent that from happening. You absolutely can, and you can. We can use technology. Any other questions you want to look at anything, you let us know. But we got nice wood in the trade for last week. Obviously, those profits are locked. The profits for this week are locked, right? So we're well above our goal. And so Bagger is released his grip a little bit, and he's going to try to get on this par five and two. Right now, the golf ball is headed toward the green. It's over the lake. Are we gonna make it? I don't know. I don't know. I don't know. But I have a little bailout area. I do. So we're not gonna lose on this trade. And that's it. Once you hit the shot, you hit the shot. So you just gotta, I trade the way I play golf. I would trade the way that I would have played baseball. We're not playing baseball anymore, but or any other sport. So if you like sports, and you like to, it's not that we're competing. You're not competing with me. You don't have to compete with anyone. You just kind of even play golf. You compete with the course. But if you like you have that kind of makeup psychology. That's what you like to do. Then and we present and play the trading game in much the same way we would do with a sport. So sound good? All right. Have fun. Well, I didn't make the green. I didn't make the green. But we made green, but we didn't make the green. Um, so the machine just took our profit. So we'll see. I don't think we're going to do any. We're going to let you watch, right? We'll let you watch, but um, we generally don't do any trading on Friday, so there won't be any more trades for us. We're done. I'm not saying that there won't be more trades here, and you're welcome to watch. But so we were playing for the to get on in two, and the machine bailed us out. So any questions, let us know. And so for the 2 week period here, beginning balance 30K, trading one mini, didn't trade that much. Um, and we net 15, 15,000. We have I'm not going to share it on YouTube, but on this market, on this screen, on this, account, where we have a very specific goal that we're trying to model and do every week. And we do that for all of our markets, including our options as well. So we have multiple positions, multiple things going on. You have to start out small. You just got to start out with your skill set, with your with where you are, and it's all scalable, right? So if you're in a it doesn't have to be with a mini, it could be with a micro. It doesn't have to be one mini. So if you're looking there like, I can't believe this guy spent all that time. That's all he made. What a loser. So if you have the skill set and you have the firepower, you can certainly push 10 of these things around in 15 minutes. In 15 minutes, that's 3 5-minute segments. If you had put on 10 of these things, you wouldn't be up 900 or 1,000. You'd be up 3,000. I'm sorry, excuse me, 10,000. 10,000 in less than 15 minutes. Are you kidding me, bagger? No, I'm not. There it is. There's the 1,000. So one of them is 1,000 at 12:15. You saw it. You saw it right here. And a micro is 100. 10 minis is $10,000. It's 6 minutes. It's 12:21. This trade went off at 12:15. But you have to do it over and over again, right? But you don't have to do it every 15 minutes. You don't even have to do it every day. You don't. Hmm. Any questions, let us know. And I'm not offended. As long as you're respectful, we want folks. We're going to respect you. We ask you to respect us. We've never had an issue there really to speak of. So, but I'm okay if you're skeptical. You should be skeptical. I think skepticism is a critical thinker. So I'm a very skeptical person of everything. I just am. I always have been. Yeah. And so I'm totally okay with it. So if you're skeptical of some stuff and you say, hey, well, what about this? And why did you do that? Or that sort of thing, as best I can, I will try to answer that question for you. This is just one tool, right? This is a trading tool. It isn't the only tool. We have 65 to 70. We have a lot of things on the drawing board still. We always are working and developing more. We can actually put in we have another whole segment to this radar. We don't have it loaded in here that we can push it out to the right. It says wide as this, giving us all the pivot information for a given day, given week, or given month. Right at your fingertips at every market. Right, everything right here. You could see the buying coming in, couldn't you, Tina? You could just see it coming in. We could too, and yeah, so it is what it is. I'll just share with everybody too. From once you go through the Q school, you never have to go through it again. And we will revise, and we are. We're doing it as we speak. We revise the Q school every 2 to 3 years, and it's in revision now. I'm not sure just when it'll be done, but if you've gone through the Q school and we totally revise it, you still have access to it, to the revised, and you don't have to pay anything. You don't. It's a one-time thing. Yes, it's Tina said. Yes, it's bullish now. Yep, yep, yep. You can see it rolling in. Um, and then also from one year to the next, right? We hope you're gonna thoroughly enjoy and learn a lot in Q School. We hope that you'll become an annual member. You may not, but and that's fine. Um, and if a person chooses not to, by the way, I'll just address this. That's totally fine, and and they're always welcome back, with a proviso. Um, they don't get the discount because there's a discount. If you roll from Q into annual, you get 30% of the Q school back. You get $1,000 back. If you come back in a couple of weeks, couple of months, you don't get the discount because we got to work that much harder. We got to recreate everything because we don't keep everything, and you'll have to work harder too. So there is an inducement to keep moving forward. It's easier for you, a little easier for us. We have to set all these programs, all the properties to them. And so when we do send them out, we push out your expiration date not a year. Well, we do a year, but it's a year like plus a week or so. So it gives us the time. So you're not paying for something you don't have. The second year that if you renew, the renewal drops to $3,500. That's where it is today. This is pricing where it is today, and then whenever you join, whatever the pricing scheme is, which is probably going to be where it is, but it doesn't. It never changes for you. That's our promise to you, so that your costs are fixed, and you can calculate, and we won't increase existing folks. We just don't do that. And but I'm not saying there won't be a price increase, but it won't be if you're a member. It doesn't. And and then the second, so you say that you have a great first year and you renew the second year. The renewal for the annual is 3,500, but we're going to give you 1 month free for your first year and 1 month free for the second year going forward. So we'll give you 2 additional months. Third year, 3 months, right? And then we get up to the fifth year. Um, I guess it's what, 5 or 6 years. You can get up to 6 months. um, so if it's your fifth year going forward, you would get 4 months. Yeah, 1 month forward, and then yeah, 6 years. So we do have folks that have been with us that long and longer, but we cap it there. But their effective cost, annual cost, is $3,500, but they're getting it not for a year, they're getting it for a year and a half. So their effective cost is $1,750. And they get Swing Machine, they get all the tools. And they can patch in on Zoom, they get all the updates, they get all. And it's significant, but it works because at that point, they're extremely independent, you know. And when we do connect, and I love to talk to everybody and hear what's going on, and I do, we're always available, as they know. Um, but they're just, if we talk, we're probably just, not even talking trading necessarily, maybe the markets or something, because they're off and running. And they, at that point, they're doing everything that we're doing and probably doing it even better. And that's totally fine. It's not a zero sum game, right? It doesn't, their success, your success doesn't detract from me. I even had it myself one time, um, back in the late 90s. It's like, well, if this guy's got such a good, they were selling systems, I guess. I don't know if there weren't that many, but nothing like, you know, but it would be something like, it's maybe an indicator. I mean, like, well, that's so good. If that's so, why would he share that? Because then it's kind of, that was kind of, maybe not just skeptical, but maybe a little cynical on my part, because I didn't myself, I didn't know what I didn't know. And what was that? How deep, how deep and wide these markets are, right? There's just like, even on swing machine, someone else may have it set at 3 minutes. Someone else may have it set at 6 minutes. Somebody else might be trading the 1 minute and the five. Someone else might be trading the two and the seven. Um, and even if you are trading exactly the same market, whoops, hey Abby, don't they're getting frisky. It's cold down here today in Tampa. It's cold. We are very chilly morning. Must be cold up north. Very cold or chilly. Um, if Even if you're trading the exact same thing, there have been studies done that, how many contracts it takes to move these markets a tick, a singular tick. They say, especially like the S&P, I think it's something like 100 contracts. So, to move at a single tick. That's how liquid they are. So, somebody comes in with a contract, and you come in with a contract. You're not going to move the market. So it's not a concern. They're deep and they're wide. What's going on here? I didn't know. Scott, 37 degrees. Whew. It's that's chilly, Scott. 37. Yeah, it was chilly. I went out to walk the dogs. I didn't have a sweatshirt on. I was like, I gotta turn around and come back. Abby is a 1-year-old golden, and she loves to eat. Absolutely loves to eat, and will eat anything. So we give her good stuff. We give her good treats like broccoli, carrots. Um, Ted's a picky eater, and he'll only eat his dog food. By the way, if you gotta, the story. You gotta be sitting there, and he wants company, but he doesn't eat the veggies, but he doesn't want her to have it. So we had sliced up for Abby this was just a few moments ago, some sweet potato, a couple of chunks of like sweet potato. I mean, she scoffs it up, and it's like it's chocolate. And so Ted sees her eating it. So he wants it, but we know he's not going to eat it. But he takes it. He takes it in his mouth, and he's not going to eat it. But he holds it in the front of in the front of his teeth there, and he's not about to give her. So that's what she was growling at, like, well, Ted, if you're not going to eat the damn sweet potato, give it to me. I'll eat it. I think he ultimately coughed it up. He didn't want it, but he didn't want her to have it. He's 5 and she's a year. Beautiful, beautiful pups. Yeah, Ted. I got to run him out. He wants to go. I'll be back. Any questions, let us know. Raul, I don't understand what you mean. I guess system facing DD from last 2 days. Not sure what that means. So I can't even address it. It's not in the form of a question, so I can't won't answer what's not asked. But I don't know what you mean by DD, and I'm not even sure what you mean by system. So if you want to formulate a question, I'll be happy to answer it or do my best. Daily draw, daily drawdown. Um, I don't know. So let me go back then. DD, I guess system facing a high daily draw from last 2 days. Um, that's not something that we're measuring. We're just not measuring that. I'm not looking at it because um now we do measure drawdowns, right? But daily draw, and explain why. Let me go to a blank space. Um, Bear with me here. Let me get us over here. I think I can. There we go. I'll go to a blank space. So again, I don't know what you're watching. Oh, I saw our profit was up. Okay. Um, that's cool. Thank you. Thank you. So I saw profit was up by 5,000. All right. So this is the risk, but that's okay. And I'm going to try to address this. This is these are the larger time frames. Let's go to the intraday. So this is like daily. This is 240. Um, when we show this, um, there's a risk here that somebody is coming by, and I don't know when they're coming by. So I don't know what you saw when you saw it, and you see a position up 5,000, and then it's down 5,000. Whatever it is, whatever it's doing, and you don't appreciate or understand what's going on behind the scenes, right? So um, that's why we try to give some perspective here. I have a weekly goal, and this is what we've done, and this will flatten out. We'll transfer out the excess funds, which is the $15,000 profit for the last 2 weeks, and Sunday we'll restart again at 30. But when you say a daily profit, let me go here, or a daily drawdown. Um, the reason why we don't look at a daily drawdown um, is daily draw. A daily drawdown. Why don't we look at it? Because what is daily to you? See, our members will be, some are trading just for 1 hour. Some are trading for 4 hours. I hope none of them are trading from 9:30 to 4. But the other part of it is futures are open from midnight to to 4 o'clock the next day, right? So to look at a daily drawdown of an intraday system, it is not it's just not relevant. Just isn't. Um, and now, if you are a swing trader, if you're a swing trader and you're going out from a few days to a few weeks, then yes, then you might be looking at, if you are following a system, whatever that is, then you might want to look at the daily draw. But what we can do is we can take Swing Machine um, on a and place it onto a chart. And I think this will be much more relevant to you. And we can take it as an example. We can take it back as far back as we want on any interval. And it could be multiple interviews, could be multiple markets, but we'll just say, and we take it back 5 weeks as an example. And what we can do is we can look at, so I want to answer your question. We can look at average winners, average winning trades. What is that? And TradeStation will tell us on whatever interval. So it's got to be the interval. What interval? And then we can look at over here, we can look at the average losing trade. Oops, as an example. Average losing trade over the last 5 weeks. We can do that. Now, what you need to know is, well, what good is that? Right? What are you going to do with that? Because what's happened in the past may or may not happen in the future. So what good is it? And we can also here, we can not only look at the average winning trade, but we can look at, since you've introduced, which is fine, right? You want to, what is the average run up? How high did it get? And how low did it get? That's kind of what you're kind of getting at. And we can do this. We would rather do it not on a daily basis, but we want to do it for each individual trade. Why do we want to do that? I'll tell you in a minute. So what is the average DD? Drawdown. Drawdown. So what is the average drawdown on each individual trade? We can also look at something called maximum adverse excursion. We can look at maximum adverse, actually positive excursions, all kinds of other data. Now, Scott is here, who's been a member with us since, and if we have any other members, they're welcome to comment too if they're here. Since November and gone through all of this. But what we're interested, what Swing Machine does on any interval, on any market, what we're interested in is what is not the profit factor, because this is an average. We didn't actually put it in. This is the backtest data or the run up. What is the consistent, what we call risk factor? It's before we actually, in terms of like a profit factor. So if we divide the average winning trade by the average losing trade, what is the risk factor? The average run up to the average drawdown. That gives us now a metric that is much more meaningful than just a daily draw. Because again, a daily draw is just too vague for us, because I don't know daily, like say daily to you means something daily, and our traders our members, our trader, not our traders, but our members are taught to define their trading session, define what that is. And so and if you're looking at me, and you're looking at a particular position, and you're looking at how much it's up or how much it's down and what you would be doing with it, and so forth, that's not the lesson or the what we're trying to showcase here, right? You would be reaching a wrong conclusion on that. So, but to give you an idea here, our risk factors here, when you do that on any interval, any market, is usually anywheres on the low side 2 to 1, 3 to 1, sometimes even higher. And that's why we can get positive profit factors because it's 2 to 1, 3 to 1. That's where we're looking at. So another way of thinking about this is if you are being presented trade opportunities whereby the average winning trade is 2 times the average losing or 3 times, well, that's good. That's good. But you still need the acquired skill set to be able to use the technology, to use the tools, and to manage your not just your individual position, but even manage your account. And that's what you can't appreciate what I'm necessarily doing. You're looking at an individual trade, but you do need to learn to do that. And that's what it'll how you enable to get profit factors that are 3, 4, 10, 12, 40. I mean, we got folks that are in Q school, and it's like their first week and they're getting profit factors of 30. Alan last week, on a singular day had a profit factor of 450. You may not even know what a profit factor is. I don't know. And if you don't, and you're just looking at the money, so you're focused on the money. That's the danger of us, not danger, but the downside of us showing, the positions, on YouTube because people reach these, oh, I would do that. Oh, it's down. I wouldn't do that, and that sort of thing. And by the way, 5,000 is with a mini. If it was a micro, it would have been, 500. So you've also got to consider that. So we can get much, much more refined than just the daily dry down. But then, but then there's the other part. You can have all that data, right? We can drill down and get all that data. But it is true that just because we have that data, or just because you have that data, doesn't mean that that's what that system or a system, anyone's system, including your system, anyone's system, is going to do in the future. Nobody can say that. Absolutely not. So, what value does it have? The value that drilling down into this, you just kind of touched on it, but we drill much, much deeper. I mean, it takes us, a couple of days in Q school just to, go through how we do this. And we got members that are doing it now, or Q school folks doing it now. But, um, What's my train of thought there for a minute? I'm pulling a Biden. I'm not that old, but um, it's how you want to measure your performance against the back test. I guess is where I was going. So that's why those back tests are important to us because you can measure your performance against it. That's what's important. And but there's no jumping the shark. A person needs to learn and understand not just what the data is, but how to use it and how to acquire your own skill to get an outcome. Because you do need acquired skill set. You just can't, we're not suggesting in any shape or form that if you don't have any acquired skill, you're going to come in and just follow swing machine and you're going to print yourself trading one mini over 2 weeks and make yourself 15,000. Not suggesting that at all. I mean, we've been doing this, thousands, tens of thousands of hours. I haven't been doing this for 6 months, 6 years. I've been doing this for 20 plus years. So, but you can learn, right? You can learn. So, by the way, Scott, now he may be too busy for you, but Scott joined. He's an annual member in as of last November, right? So if you want to, maybe Scott will answer, maybe he won't. That's okay. I gotta break away for a few minutes, but thank you, Raul. And but I'm a prop firm trader, so I always remain concerned about drawing. Well, that's exactly right. And I am going to have to break away. I'll try to come back later. Yeah, we have members that use prop firms, so I don't have an opinion. We have the capital, so I don't use prop firms. And now I understand why you're asking. So that's a good point. Um, and that's what one of the challenges with using a prop firm is they have their rules. around using their capital and what they're doing. And you know what? We have enough rules to follow without someone imposing that on me, but I'm okay with it. We do have members, and I understand. I do want you to know, though, the point being is we can give you much more detailed information on a than a daily draw. We want to get you what you want to know. What you want to know is, if I take this 5 minute, what is the over the last 5 weeks? Can you tell me, Don, what is the average loser? What is the average winner? What is the average run up? What is the average dry down? And the answer to that question is yes, absolutely. So it was a good question, and so I hope I helped a little bit. I got to break away. Thank you. Raul, Raux. So your question about drawdown is good, is good. As a trader, whether you're with a prop firm or not, now I understand why daily, um, because of the rules of the prop firm. So I get that. I understand that. And but but you can drill down. I guess what I'm saying is we could take Swing Machine, any of these programs that we have, and we teach you how to drill down on a trade by trade basis and really get control. And if you have a prop firm and you're trading with surgical precision, you don't want to be in these markets. You'd be shocked at how, I think you guys maybe are. We're not in the markets all the time. We're not trading our heads off. Now sometimes we get the program, a program rocking and rolling, but we're not trading that much. And be surprised, with what you can get done. So, but we can drill down into that kind of detail on any program, and it can be very, very helpful, not just to manage your time and capital with a prop firm, but also to help manage your expectations of drawdowns and losses and so forth, and of wins. Because when you can manage your expectations, then you're going to be much less concerned, right? You're just going to be much more relaxed. And when you are relaxed, um, whatever it is you're doing, you're going to do better at it than if you're tight as a tick. Makes sense. But great question. Okay, so not don't suggest anybody take these trade. I wouldn't, we have a lot of cush here. I have a little bit of time. We're going in on the 1 minute. We're going to see if we can add just a little icing to the cake. That's all. And so we're going to try to see if we can take this 1 minute down. I missed it. The machine is up. Would have been up $200, $300. I was a little late to it, and I'm going to do it kind of what we call mechanically. And so we'll see how we make out here. What type of trade is this? This is a 1 minute counter trade to the five. It's a 1 minute counter trade. Has a lower probability of a payout. The payout will be small. We'll be aggressive with this, but we'll see how we make out. We don't have the VIX, right? The VIX is still in a short position. We really need the VIX in a long position if this is going to pay off. So we may be quick with this because we don't have a rising VIX at the moment. Up here. Up here, I'd like to see some on the ball flight. I'd like to see some green. Yeah, there's one. I need to see some buying up here on the VIX. Not seeing it yet. There's one. We need more. Notice the 5 minute now. The 5 minute NQ is starting to dip, so that's good. So that means the 1 minute is eating into it, and maybe I do get a counter trade that develops into a larger trade. So that's kind of what I was shooting for, maybe fishing for here. Now I'm doing something very specific here, but I got a lot of wood, right? I got a lot of profits, over the last two. I'm not going to do anything that's going to hurt that, right? So, and this is, my, probably going to be my last shot here. Um, so we're going to see if we can. And what I'll end up doing is I'll lock it in, and then I'm actually going to be with Alan, and I'll lock it in. And if I come back and maybe I get that drawdown again going into the close, and I get myself that big fat fish, but we'll see. But if this is going to develop into something more significant, I need to see the ES dipping. I need to see certainly the Russell dipping. I need to see the VIX ripping up, and it isn't. So I'm a little early, and we'll see if we get it. But right now, it just is that's for us, for our position. That's good to see the VIX doing that, but it needs to start rising a lot more and quickly. See what happens. Now, as your trading skill develops and acquires, right? In the beginning, you're super focused on that first trade and on that second trade and the third trade in your first 2, 3 days, and you're trying to, and I know what you're trying to do, but and you will do it. And but in time, you will have done this so many times, you'll become so confident is the plan, right? You should become so confident that it'll be a relaxing state to you. It's almost meditative. And you just learn to, take your lumps, and if you don't get it, you don't get it, and you move on. Now, if you're over leveraging, whether it be your money or a prop firm, or you're over leveraging your skill set, then you're going to have stress. Okay, so we got the VIX moving in the right direction. The VIX is coming up. See, it says pressure up. There's another green box. It's starting to move that way on a 5 minute interval. This is very, very small, but it's very, very sensitive. And if you know what these relationships are and you know what's taking place, so what that means is, the call buying in the options market is dissipating. And if they're not buying calls, they could be buying puts, and the broker dealers will begin to sell stock. The market will begin to go down, and the other fish will start to come in as well. Right. So that's what we're doing. We don't think about it. We'll explain all that to you, but right now we came in on this 1 minute. We were at about $200 off the mark. I was a little bit slow. The machine could have got me a much better entry. Instead of being up 300, I'd be up 500, and it's putting pressure on the five. So if I want, what I'm rooting for, you know, but is I need and want this 5 minute to go into from a dip into, you'll see it light up white short entry. That's still not the signal. If it stays true, so we're at least another 5 to 10 minutes away from what this has to do, then go into a short, and then we just might have ourselves a big fatty. So we'll see. We'll keep eyes on it, and I don't want to risk. We had a $465 drawdown. Um, if we get up, 4 or 500, I'll come in, and what will I do? I'll set a break even. I'll tighten it up, and we'll be guaranteed another free trade. And if it works, it works. If it don't, it don't. So you can see the 1 minute is solidly drifting down. We're in good shape. I don't want to set that stop quite yet. I want it to breathe. I want it to be able to breathe. This VIX is coming up, which is good. It's 1:32 o'clock on an options expiration afternoon. Pretty dicey, right? We got all kinds of cross currents going on. There are people, getting rid of their option contracts. There are people getting out of their futures. It's an options expiration day, so it's really a difficult environment. If you had a rough day today, I hope you didn't, but you may not want to trade on an options expiration day because it's turbulent, especially in the last couple of hours. And I can't think of any other way to describe this, but if you're a golfer, right? Um, you hit a tee ball, and you say, "Oh man, that really felt good. I had a great posture. I had a great grip. I had a great swing, and I hit the golf ball, and she starts to fly off really good." And magically, you could hit some sort of button and return that golf ball to in front of the tee for a 30-foot drive, and you take it. Yeah, return that golf ball, and that golf ball drops out of the sky, and you advance the ball 30 feet. You will never, and you keep doing that over and over again, are you ever going to hit the golf ball 300 yards or 280? No, you never will. You never will. But Don, when I hit that golf ball and I let it fly, it went wide right. It went way left. It went over here. It went in the lake. It did that. Well, that's you need to learn to hit the golf ball and to control. Um, we have some excellent golfers in our midst, and they because there's more than one now. They have a phrase: miss small, aim small, miss small. Now, what I'm aiming for is what I'm aiming for. My miss is my miss. Doesn't, okay, she's coming back up. Just doesn't want to let go. It's a difficult trade. Um, but the beautiful thing is here, you get to do what? You get to play your game, learn to trade your game, right? If you're going to make the investment of time and capital and all the golfing apparel and all the golfing tools, you want to play your game. You don't want someone else playing the shots for you. And this does not look like it's going to cooperate. We just didn't have the VIX. I don't like the looks of this right now. Okay, kids, that is mine. I've got to break away. I'll try to come back, around the 4 o'clock hour to answer any questions. Um, Aim small, miss small. Small one, didn't get it, no problem. And we want to say thank you for stopping by. Be sure to visit the site. Any questions, you can email us, and you're also welcome to call. And we hope you had a great week. Hope you had fun. And it should be relaxing. It should be fun. Should be something you enjoy. If it isn't, you might want to question: is it worth doing? And just again, just like golf, if it's a source of anger and frustration, and it's maybe not worth pursuing. But we love it, and we're happy to share the lessons that we've learned over years, and we're prepared to share the tools, the many varied tools. And we wish you the best. So again, thank you. Have a great weekend, Scott. If you're nearby, good to see you. You're welcome to call anytime, Scott. And I'll be in the office too, tomorrow. And but you can always call our annual members. I'm always rooting for them. I always want them to do well, but I don't intrude. People have lives, responsibilities. uh, you know, Trading comes after, family and primary incomes and so forth too. It comes further down, and they don't need me, calling and pestering anybody. We don't do that. But I'm always interested. I'm always rooting for everybody, and I'm always available for our members. We wish everyone the best. And it isn't for they're not relying on me for specific buy and sell recommendations. We don't do that. But as a private club, we can discuss scenarios and and strategies and approaches and things of that sort. And if somebody finds themselves in a slump, if they send us their scorecard for the week, I will review it every Saturday morning. And I may not be able to get someone immediately out of a slump, but there's always another alternative. There may be another way to go about it. And we try to help, you know, identify what those approaches could be, and other tools. So have a great weekend, everyone. If I don't see you again, thank you. Have fun.